This is Satya Pradhuman of Cirrus Research. Welcome to this episode of Market Conversations. In this episode, we deal with the analytic tools in finance, and in particular, we focus on infrastructure. And so the question is, why is infrastructure matter when it comes to portfolio theory, portfolio management? At the heart of this is the idea about generating alpha. And alpha is about outperformance over time. The active ingredient here being time. And so when you think about consistency, we think about tools, and we think about the sort of efforts and support that a team has as they generate decisions to make a strong performing portfolio. I'm pleased to announce that we've got both Asriel Levin and Peter Millington joining us here for this conversation. And both of these gentlemen I've worked with for decades. They're both from the academic background, but also practitioners in finance, formerly and currently running money. And, with this wonderful opportunity of moving into developing a technology platform for investors who manage money. And so I thought we couldn't find a better team here to discuss what is infrastructure, why does it matter, and how do we do better. And so Asriel Levin, Uzi as we call him, he's the co-founder and CEO of Finserra. That's the technology company that we'll be talking a little bit about. He's also the current managing partner and founder of Menta Capital, which is a market-neutral fund. Prior to forming Menta, Uzi was a managing director at BGI, where his real focus was developing and overseeing market-neutral business in long-short funds. And so when we look at Uzi and his years in the industry and his very, very robust background in finance, really a terrific person to speak to this, given the years of experience. In addition, Pete Millington, I've worked with him for quite a while. Pete is the founder and chief technology officer at Scientific Financial Systems. They're based up in Boston. Prior to forming this firm back in 2018, Pete was the director of quantitative equity strategies at Fidelity. And from there, prior to that, he's earned a master's in aerospace engineering from MIT and undergrad from aerospace engineering at Texas A&M. Again, both speakers, I think, will really shed some light on this subject. I think the power of this conversation that we had and what I can take away from the experience is that they were able, or collectively we were able to offer examples, our experiences in making decisions and dealing with the trade-offs of, develop now and sacrifice speed potentially, but thinking about the long term. So a few things that we will address in this conversation. We've broken it up into a few parts. The fundamentals versus quantitative portfolio managers, very different world, but I think technology is forcing this world to meet. In terms of finance tools, what's the landscape like? How can we do better? What are the right questions to ask if you've got the right tools in place? The challenges in change. As we all know, change can be very, very difficult, especially when it comes to training, costs, redundancies, etc., and a culture of change. That's hard. That's very hard to deliver. Ultimately, what's the true cost or opportunity cost of managing money with inferior tools? So I really look forward to this conversation, and I think you're going to enjoy this very much. Welcome to this episode of Market Conversations. This is a series that we've run that delves into various research topics. We focus from active views on the marketplace. We focus on data series that are interesting
new technologies, new methodologies. And this episode, I think, is a big deal. The headline is Tools in Finance, Portfolio Management Infrastructure. Is it a buy or a build? And we think this is a big deal. Each of us that's speaking today, have had to deal with this over the years or decades, in fact, in all three cases. So I'm very happy and pleased to present both Asriel Levin, or called Uzi, and Pete Millington. Both of these gentlemen are portfolio managers, former portfolio managers. They're also leading technology platforms as well. And so what's great about this conversation and to be able to get their insights is that you're not just looking at a technology developer that built a tool that can manage data and deliver to an investor. You're looking at a world where the tools are being developed by the need. And so the seasoned manager, after working at this work, as humbling as it is for decades, we begin to figure out, what works, what doesn't work. And then we start to have a wish list. And then we begin to see that, wow, my team is getting tied up with things that, subpar, and we're losing time. And so, if you're managing a team, if you're dealing with data, this conversation is I think severely needed. So at this point, I'm going to turn it over to both Pete and Uzi to walk through a little bit of their background, besides the bio I've gone through, but to get it really from their take. And at this point, Pete, I don't know if you want to start, and we can go in one order.
Thank you, Satya. Good to see you, Uzi. Thanks for the introduction. So yeah, just quickly on a little bit about my background. I studied engineering in school and worked in the defense industry for a few years before I jumped into finance. I was always fascinated by finance and the aspect of modeling and using quantitative techniques to understand and predict what's happening in the marketplace. So I joined Fidelity Investments in the mid-90s as a quant analyst, and also ended up running strategies and running a research group there. And what I've really enjoyed is actually just the application of the technology and the opportunities that it affords, particularly to make efforts to be on the leading edge, and to try to understand and work in ways that you're leading the crowd and discovering new strategies and being innovative and differentiating yourself and your firm from other competitors.
Okay. I've been managing money for many years. I started my career at a company called Barclays Global Investors, later bought by BlackRock.
That was a boutique firm, right?
A boutique firm, yes, managing a multi-billion-dollar long-short fund. And then later on, decided to start my own hedge fund, Menta Capital. In both cases, I both built the systems and then ran the investment strategies. And then a couple years ago, I think, came to the realization that we in the money management world run things extremely inefficiently. In a sense, say, when a new fund starts, typically it has to build things from scratch, investing time and money in building things that many other people have done before, very, very inefficiently. Furthermore, even established players, the capital and time that it requires to keep systems up to date is very significant. And often people end up with systems that are very subpar. So by how would I say it, looking for resources that are available out there, one might be able to significantly improve both the efficiency and reduce the cost of what it takes actually to run a fund.
Yeah, I mean, I think your observation about your management experience and how you realize we were in these silos. And I sort of wonder about, what is it that drives this? I know every industry has this issue, but I think it's more overstated in the money management business. And I think about this question about open architecture versus generating alpha, right? So in many ways, we are our own private labs when we're running money. And as a result, is the cutting edge the definition or interesting data and processes, or is it a combination of the tools you're using that gives you an advantage, right? And so maybe it's the nature of active management. It's such a competitive beast that has driven this sort of like siloism that's come about. So out of this conversation, if the world wasn't as challenging, and especially when it comes to running money, maybe we would be fine. Maybe if it wasn't that difficult, we might not even search for a better tool. But I think along the lines, the competitive landscape is driving this too. So you've got now worlds are colliding, line out of Seinfeld. The reality is that there was a time where the fundamental managers were doing what they did. There was a time where the quantitative managers introduced to running money did what they did. And so the question is, you fast forward a few decades, you're getting the technology to like link things together nicely with data. And now the question is, how can we compete on this when everybody's starting to use some sort of tools and data? And so, I thought, Pete, maybe think a little, I'd love your take on the competitive landscape that you think drives this moment. Would love to hear your take, and as well yours, Uzi, in terms of, is it just us, or is it just that the job got hard and we're trying to we got to generate alpha?
I think the industry in general has continued to evolve and improve, and I think that's a good thing for the investment community as a whole and society as a whole. But there's obviously continued pressure to continue to innovate. And obviously the computing technologies and capabilities have been growing along the way, and information, the availability and just the diversity of information that's available, and just creates opportunities, but it also ends up highlighting the need to be able to respond more quickly and more broadly, and to adopt and to find ways to be innovative, to look for opportunities in the information in different ways, and then stay one step ahead of your competition. And I think that's generally a good thing. But the other thing, as you alluded to, with respect to fundamental versus quantitative approaches, I think over the last few decades, quantitative techniques have become more and more dominant and prominent in the industry. And firms are therefore investing quite heavily into these capabilities and making it more mainstream into their operations, whereas before it might have been, as you said earlier, siloed and kind of to a certain subset of the activities to become much more pervasive. And firms are looking for ways to actually leverage that across their organization, and also finding ways to benefit from the quantitative analysts and the fundamental managers to actually collaborate more and to find common ground, and come together. So I think there's a lot of confluences of a lot of powerful things. I've always felt that the quantitative community have been early adopters of technologies over the decades. And I've always been proud to be, involved in that industry for those reasons. And I think, you find kind of really creative use of application of technology in finance. And, so I believe that kind of quants are always at the forefront traditionally. And, you're seeing that play out, and it's becoming just more accelerated. And people have to get a lot more creative as to where they actually differentiate themselves.
So I think the money management industry, we tend to be very secretive. We believe that what we do is just, if anyone sort of finds out about it, we'll sort of lose our edge. And I think because of that, there is a bit of a confusion between, I'll call it generic technology that everyone uses, and really what are the unique aspects of my investment process. So having an asset master, being able to ingest data into the platform, having an optimizer, etc. This is, everyone does that. There is no need for everyone to, I'll call it like, reinvent the wheel. And in a sense, the analogy that I see is, just imagine architects. If every architectural office tried to build their own AutoCAD, this is the analogy that I see sort of in the money management business. So I think what managers need to focus on and identify what is their edge. And then whatever is not edge, whatever is generic, they should try to find the most efficient solution that is out there. And I think we as an industry are very far behind in that respect.
And just to add to it, Uzi's comment about, not reinventing the wheel. One of the motivations for me starting this company, Scientific Financial, was that there's a lot of non-core activities that are required to actually, participate and kind of lead in this area. Ideally, people need to focus on their value added, and we're looking to help them kind of get there more quickly. But what we found lacking in the kind of tool set that was available in the industry was just, the ability to have help to do those kind of operational things, but still give the users the ability to be creative and to actually find ways to add value. Because a lot of the existing kind of traditional tools were either you'd had to build it from scratch yourself, or you had to buy into a system that was helpful, but ultimately was quite limiting. And we're trying to provide, both those opportunities. And that was the motivation for the company, and kind of related to some of the comments that Uzi was made.
I think that's a really great point about this idea about your edge, your investment process, because over the last few years, what I have found was there's been a huge demand for new data. And, I think it became so intense as a research provider, we started to back away from that demand. I mean, it was almost this sort of a weapons buildup. Who's got more data? Who's got more processing power? And I think in that dance, we sort of forget something super important, which is the core of investments. Like, what is our process? If markets are efficient, the search for sentiment data, gosh, we've had a few flavors, and who's going to have the better one? I don't know. But maybe we're missing the point, which is you still need to get back to why you got something right or wrong and understand it. And so any piece of information, insight you have on your process, any sort of like additional color you can get on what you're doing right or wrong, is the stuff of tweaking and improving the process. I'd love to get into a little bit more on our backgrounds, because I think that lends a lot of credibility to the search for tools. Like, we're not just coming into the business saying we're dissatisfied. Oh my, let's find something. No, I mean, I think we've all been working decades in this industry. It's a tremendous role we get to play as researchers and portfolio managers. I'll always be a researcher, I think. The reality, though, is that in terms of this search for the right tools, in our work process, our workflow, you started to hit like really basic snags in the process. So, for instance, how much time does a manager have to spend on the detail-mindedness of their analyst, right? How much time do you have to spend on the tools that analyst is using? How much training is there? And so our own experience has been, hey, we're in the publishing business. We can't get it wrong, ever. And so in a weird way, you make a decision on a portfolio. Internally, you might have gotten something wrong, but it's not like, boom, published out there, dated, stamped, signed. And so we started realizing some of the custom functions that initially looked really appealing. Oh, wow, this is great stuff. We don't have to do a lot of work to pull this data together, create this series, link it together, and then pull out some estimate. What we found was that those functions, you really got to read the fine print of how they define the functions. And we made investments into those processes with various vendors, and we learned the hard way that the assumptions we were making weren't exactly quite right. And so my personal sort of experience and launch into this, in the last 10 years, we've actually spent, we hired on a software team, built a SQL platform, and we continue to build out a front end of various reporting tools and analytic tools. And the whole reason behind this is that we saw errors, we saw analyst training problems that we had. And at the end of the day, we were taking bright people off the line, right? And so how valuable is it to have your senior analyst spend time coaching a data vendor analyst on what's wrong in their variable? And so my personal experience drove to some sort of a frustration where we had to step back. And by the way, not all research teams and portfolio management teams are massive firms that have oodles of money to spend on infrastructure. So by the time we decided to do a build, to build some infrastructure to then launch tools that were custom, it was some serious thinking. And so, I don't know, Uzi, would love to hear a little bit of, your sort of process and how you went through that, and how you've ended up, where you're at now with design.
As I mentioned, I built systems sort of both at BGI and Mentine. In both cases, this was a multi-year process, very, very costly. And you realize over time, oh, I missed that, so I should add it, etc. And hence the idea for Finxera. But I think what managers need to do is be very honest in looking and evaluating their current process. How much is it costing you per year, sort of personnel, systems, etc., to actually have a system? And given sort of how much you're spending, are you actually happy with the results? We as money managers are bombarded with, I don't know, hundreds, if not thousands of potential data sets that could add value to our process. How long does it actually take you to get a data set, integrate it into the system, and evaluate it? You have a new investment idea. How long does it actually take you to take it from this initial idea to actual implementation? And if you do not have the right system, then your the cost is very significant, and the opportunity cost is even more significant, because if you could get things in place at a fraction of time that it's actually taking you, that's alpha, that's worth a lot. And people really should be, I think, honest about evaluating the quality and the satisfaction from their current system.
Yeah, you touched on something that I thought is really neat, which is, the time to convert. I've had my own personal frustrations with, we speak to a data vendor that's got something interesting, and I'm like, in the back of my head, the team's excited. I'm like, oh man, how much time is this going to cost analyst A to bring that in, to then fold it in, integrate it with our process and so on. And it is a stopping, it's sort of like this, it puts the brakes on, what you want to go after. And so, this time to convert, let's take this further. Let's systemize this conversation a little. What are the impediments to asking the right questions about the tools? And one is time, right? Time sink. We've already put money into a process. We've done training, and we've locked up data on somebody's platform, right? How do I undo all of this? And so I do think that conversion time allows software vendors to sort of like capture their audience. We're all guilty of this. I think we're all struggling with this in all different ways. Think about the back office with other types of databases that we're using. But yeah, I mean, one is the time to convert. Two is the sort of like, what is it, the retraining, the cost of making that conversion. I don't know, Pete, if you've got, a few thoughts on this too, but to me, it's been, it does feel like you're a little bit strapped.
Yeah, yeah. I just quick comment on the previous conversation, and like when I was on the buy side as a DOR, vendors would come to me and say, "We got a new data set," and I'd say, "Well, no, I don't know," and they'd say, "We'll give it to you for free for 6 months." It's like, but I, oftentimes still say no because there's such a cost involved in doing that work. And you don't know if you're going to find value, and it's not just the cost in the data, But I think with respect to the challenges and there is going to be some inertia for the system that you've maybe built yourself, or it's already in place, and that's understandable. When I was on the buy side, we had various models, and we intentionally looked to not just improve upon those models, but develop different models, with a different kind of process, not only the different data, but different techniques, different objectives, different formulations, and frameworks and that sort of thing. Because ultimately you want to explore different capabilities and find complements to what you've done, and grow and learn from it too. And so I think that also applies to infrastructure and technology. Ultimately, at the end of the day, you don't want to suffer from a groupthink. You really want to investigate alternative approaches that you can explore the capabilities. And some of that, sometimes it's actually using not only different data but different kind of systems and different techniques. And so you just have to, that those come at a cost of there's some effort to it, but ultimately organizations need to continue to innovate, and at some point almost every system has its limitations. The design plays out, and what you designed it to do 10 years ago with the tools that were available at the time reaches its limitations. And so firms have to know at some point they have to be willing to adopt new techniques to continue to grow and innovate and differentiate themselves.
Okay, we'll take a break here from the conversation that we've had here with Uzi and Pete. The back half of this, I think, gets really neat because it gets into some very hard discussions around the true cost of money management. And I thought what jumped out at me from that conversation was this idea that the cost is severe if you're putting up with inferior tools. As difficult as it is to face change, I think some of the examples that follow here in this back half of the conversation kind of bring some light to why part of the job of running money is also managing resources. And I think that jumps out loud and clear in the back half of this conversation. The tail end of it, we're also able to get some specific color on Finserra. What do those guys do? And also scientific financial systems. So both Pete and Uzi will talk about their businesses and the goals and the motivation behind those products that they've surfaced.
Yeah, I think this is sort of very natural for humans to, actually in the investment world, realizing losses. I made the wrong investment. That's very difficult. And typically, this is what differentiates a good investor from a bad investor, where a good investor is able to cut their losses and move elsewhere. And similarly, once we have sunk cost into a system, mentally, it's very difficult to say, well, maybe going forward, this is not the optimal way. So in a sense, we are admitting that maybe we did not make the optimal decision, or the system that we have is not the best. And I think that's a real, let's call it a mental impediment to really find the most efficient solution.
Yeah, those are great points. I mean, Uzi, you got into this idea of fear, right? At the end of the day, can we embrace something that we got wrong? Can we embrace that, wow, our designs that we were so proud of 8-10 years ago, it's not living up to the hopes, or the world's kind of changed a little bit. And two is culture. There is a culture of whether or not someone is going to embrace change or not. And as a manager, forget about portfolio management, just as a manager, I think, you have to be able to have an open eye and an open mind on what's out there, who's doing something better, how can we get my team to be smarter, because they're, if you've hired them, they're probably bright people. How do we get the most out of them? And I think you're dropping the ball as a manager to not raise the question, right? And so this idea of a discipline, one great line of conversation I had with a client of mine years ago was, we as in research struggle so hard to make sure you see our research. And, because every manager we speak with, oh, wow, if you're in a US side, you're getting 600 emails a day if you're fundamental and your coverage. If you're international and global, forget it. It's like 2 or 3 times more. So how does someone see the research? So we spend a lot of time when we first work with a client to get them involved in how we can make sure they're seeing it. And one manager came back to me with a really great point, and he was like, hey, I got this. My sources are as important as my stock picks. And if I don't vet my sources, if I don't know what I'm going to be getting, what's the point of just accepting things? And so I think in the same spirit, this idea about tools, you vet your tools. It's just as important as what you're deciding on, what you're using it to make decisions on. And I really struggled with this budget discussion on making some changes to our process. But I do think, years later, I completely, not for a second do I regret it. There were moments there where 18 months in, we didn't have a lot to show for it. And I was like, uh-oh, did I really get this wrong? But yeah, no, I mean, but, to sort of bring this full circle, I mean, Pete, you guys both of you made some important choices as you've evolved as managers. I mean, bring it down to a final few takes on, what is the motivation? How do you get the courage to step out? How do you break eggs to be able to make something better?
Yeah. I think for me, I always enjoyed running money and being innovative with the strategies, but also wanted to do something to help the industry as a whole, which is part of the reason why, I embarked on this particular company. I think there's a lot of ways to help people out. One thing that's always fascinating about this industry as a whole is that, we're quants and, we embrace the scientific method, but at the end of the day, it's an art form, right? And you have to bring some judgment, you have to bring some creativity to the table. And ultimately, that's where we succeed. It's if you get so obsessed with the tools and writing code and trying to get everything right, it's as important. But if that consumes you and you don't make enough time to actually think about how the markets are working and hypothesize on how you can actually add value, then something gets lost. So to help people with those kind of get through that the process and operational things, I think ultimately that's what the industry needs more of, is like figuring out a way to be creative, using the data, collaborating with each other, particularly, across the quant fundamental space. That's where I think there's huge opportunities here. And, the industry is going to go that direction. And, firms are going to be compelled to embrace that. Otherwise, they're going to fall behind.
So technology is progressing at a phenomenal pace. And I think very few managers are really have the know-how to be able to keep with that technology. And people, again, should realize that, should be willing to admit that. But furthermore, I would go back to, for each manager to look at their process and try to identify what is their edge, where do they add value, and really try to focus their resources on that part of the process, as opposed to struggling sort of to keep up with some sort of a platform that enables them to run something very suboptimal.
I think that's well said. I keep coming back over the course of this conversation and the prior ones we've had. This idea that are we caught up in the moment of the tools, the bits and the bytes? And did you lose sight of the real decisions that you're making and the decisions you need to reconsider? And anything to free you up, free your team up on this is the stuff.
Let me sort of like going back to sort of the cost thing. So cloud is
please
is the thing. And yes, I can sort of, instead of running my server sort of in-house, I can move it to the cloud. It actually takes a fair amount of expertise to run things efficiently on the cloud. Amazon is amazingly profitable because they're able to charge for their services. So if one naively just, okay, I'll move my stuff to the cloud, I mean, the tab could be very, very significant. And people sort of need to, again, both sort of the efficiency may not be great, and again, the cost can be huge. So people should really pay attention to these things.
Yeah, no, I think the hidden costs of technology are incredible, and as a result, why are they growth companies?
Speaking of hidden costs too, you have to factor in. Yeah, you have to factor in too the time that you as an individual spend on these problems, and and it's not just what shows up on your P&L for your division, but can you actually be working more efficiently in a different way, right? Because over the years I've built a lot of systems, and I've always wanted to believe that was creating value, right? But at some point you have to make sure, right, that you're not spinning your wheels, right? You're actually working in the best place for you to actually add the best value, and that gets lost in there. And the hidden costs are part of that, and so that's a very big part of firms need to be much more aware of how expensive this are, and they invest in data, they invest in their skills, and they just need to make sure that they get the best out of that and they're getting the most efficient use.
I mean, to sort of fold this together, I think at the heart of it, it is what is your competitive edge as a investor, right? Let's not forget the goals. At the same time, one of the skill sets a manager of the team needs is to be able to be aware of the craft of the tools that they own, they're using, and they're invested in. And they have to be able to make brave decisions about making change at times. And so, sometimes it's a culture issue, sometimes it's a money issue. But again, the bottom line is it's about delivering alpha for your clients. And so what we do in research is like, sometimes we'll, to sort of like bring this another step for the listener, is to sort of give them something to chew on. And I thought your companies are interesting, your product, the directions you've gone in are very interesting. At the end of this conversation, there'll be links to your sites and so on. But I'd love, we've got you both here, and as research, we always want to leave something actionable. Pete, before we close out, tell us a little bit about what you're doing at Scientific Financial.
Yeah, thanks. Thank you, guys. So Scientific Financial, we offer a platform to facilitate quantitative fund management research, ultimately helping people work much more efficiently, but still have the flexibility to be creative. So for example, provide a front end that provides kind of very intuitive access and quick analysis, but at the same time exposing kind of our value, creative Python tools so that people can do operations and manipulations, but also do it more efficiently, and then seamlessly go from the research process into the production process. Also have the flexibility to integrate their own data very quickly and easily, and apply machine learning techniques. But at the end of the day, an open architecture where you can access and work with all the data you want, no matter what vendor it's coming from, no matter what data venue it's coming from, and then just provide those tools that are informed by practitioners in the business that have done this using these tools and built them specifically for these purposes. So that's kind of, in a nutshell, our firm. Encourage people to have a look and, visit our website at sifeinsys.com. So thanks.
Awesome.
I've been a quant for many years. So the first requirement for the Finxera platform is to fully satisfy the requirements of a hardcore quant, basically the full quant process. That said, we designed the system in a very modular and friendly way. So basically a no-code system, or if one chooses not to code, so even someone that is not a quant or not an expert programmer can utilize the system very, very effectively and use it sort of to enhance their process.
Very neat. I think, the phrase you use there, no code, I love it, because I'm always dreading the tool that forces another language on an analyst on the team. I think,
But the other thing, and I think it's true for both Pete and myself, we're not trying to tell people or harness people to invest in a certain manner. We're just giving them the tools to implement whatever it is that they want to implement, but hopefully more efficiently.
Well said.
Well said. Awesome. Well, very good. This was, I thought, super enjoyable, very informative. It is a big deal when it comes to generating alpha. It's not just which stocks did you pick, but how do you get there and how do you repeat it, right? It's over time, performance matters. So I think, searching for the right tools will always be top of the list for managing the process. So thanks very much, Uzi. Thanks very much, Pete.
Thank you, Satya.
The email that we'll be sending will have links to your firms and your backgrounds. And as always, we'd love your questions and comments.
Thanks so much.
Thank you.
Great.
Bye.
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 Thank you.
All right. Thank you very much for joining us in this Market Conversation episode. As always, we're always looking forward to getting your feedback, always looking for ways to do better and to make some of this material easier to digest that we publish and research. At the end of this email thread, you'll also get specific color and links to both Uzi and Pete, their biographies and also their businesses. Thank you and all the best.